This has been a runaway trade, the momentum trade. What could stop it?
So, you mentioned it's a momentum trade. So to be able to figure out exactly what will stop it, it's basically impossible. But we think that there's a couple things to keep in mind. The interest rates right now, we did get that flight to quality last week, so yields went down. Markets like that. But then take a look at what's happening today. Yields are backing up. That can take some of this momentum out of this rally, because what's going to happen is people will just start looking at valuations. And with the uncertainty around where interest rates are going, we obviously know that eventually the Fed will cut rates. We just don't know when. And when you're looking at long-term yields, when you're looking at the Treasury market, the dynamics in the Treasury market are just for higher yields because we have so much issuance that's out there. And this is something we think could take some wind out of this sail here. It's just it can be a valuation correction.
Really interesting that you're looking at what's happening in terms of supply side with treasuries. But what about the inflation picture? What have you been taking from the PPI, the CPI, and whether or not we are cooling or whether actually we're still just too high for too long?
It is cooling. The data we got last week was good news, but let's keep in mind it was 1 month's data, and we still are a far way away from where the Fed wants to be. And when you actually dig into some of those reports, this is a goods deflation story. This isn't a service deflation story. In fact, we're still looking at service prices that are quite sticky, and housing as well is another thing that's sticky. These are things that the Fed is going to be taking into consideration. This is why we think, and we kind of lean in the camp, higher for a little bit longer. We might get something in December, but we need a lot more information before we can say that the Fed can do that.
And just add in, as you say, that flight to quality, that volatility that we see because of political risk over in France, of all places. I mean, how much, Megan, do you have to take in the global geopolitical risks right now?
I think it's something we have to consider. When you're coming into this year, we knew we had a lot of elections and political risks globally. And let's keep in mind, we still haven't gotten to November here in the U.S. So there's a lot from a political standpoint through this summer that can keep the markets on edge. And it just tends to be when there's so much risk out there, but the markets are so high. What's the upside risk from here? That's what I don't see. I see a lot more downside risks from here than I do upside catalysts.
So what to do as a chief investment officer of Verdence Capital Advisor? I mean, where do you see, is it protecting your downside, or is it hedging, or is it more sort of reallocating in some way?
So at this point, there's, hold cash. Keep a good amount of dry powder that you can take advantage of opportunities. That's what we've been doing. Cash isn't hurting you right now. You're getting 5% or more. Eventually, that won't be the case. But for now, you have the cash to be able to look for opportunities. And there will be opportunities. Right now, if you look at the market, parts of the market that are really unloved, look at small and mid-cap stocks. Now, the economy starts to roll over. They're going to struggle a bit, but that's the time to take advantage, because that's where you see the best upside as we get out of this, an economic slowdown. And they're priced so on a relative basis versus large cap, the cheapest we've ever seen.
When you're thinking of a technology show such as ours, and many want to understand the realities, you need to be diversified, but they also want to understand where the opportunities are outside of Mag 7 in technology. Like, is there a play for tech or indeed AI in small and medium-sized companies?
So, the AI is here with us. It's been here, but it's just only going to evolve going forward. The one thing when you think about AI is it's not just technology, and I know it's a technology show, so I apologize, but let's look at other areas of the market that will benefit from AI. So what are the companies and sectors that are going to benefit from implementing AI? That we can see that in their earnings. Those are some of the things that we're looking at. Industrials is an idea. Some consumer stocks, I think it's right now a little bit cautious because the economy is weakened and consumers are definitely stretched. But think of where the companies that are going to benefit from the use of AI going forward.
What about energy? I mean, there's a great story, very well read, all about the focus of Bill Gates at the moment, perhaps on nuclear energy. And I'm wondering whether you're seeing energy and some of the infrastructure needed for this new AI paradigm shift as a place to bet.
Yeah, absolutely. That is an area. Look at what utilities have been doing as well because of the use for it. But the infrastructure side, we don't have yet to be able to support what this AI is going to look like in the next decade. So we do need, from an infrastructure standpoint, those are some areas that we'll look at as well as we see some broader weakness in this market.